We're joined right now on RealAgriculture.com by Ann Dunford for another edition of the Beef Market Update. Welcome today, Ann.
Hi, Sean.
Okay, Ann, you're on the road today. You're out and about. You're pulled over because we've got the new Alberta safe driving law. So we're ready to go. Okay, Canadian dollar today is the big story. Drops below par for the first time since I believe February. Good news story for cattle.
Well, it is. I mean, there's been so much economic uncertainty over the past, few years now, but especially here in the past year. And of course, we've been faced with a very strong dollar. Today, of course, some news coming out of the U.S. in regards to from the Federal Reserve, and that's been driving sending the U.S. dollar higher. They're viewing it as some good news for now, and of course, that has meant Canadian dollar back under par, and that most certainly will augment well for cattle and beef prices compared to where we would have been at levels well over par.
Yeah. So, and today's issue is mainly due to some, I guess, what we call a stimulus package. We don't really need to get into, but it happened in the U.S. And it's the Canadian dollar weaker versus the U.S. dollar, which is great for the beef industry.
Yes. So, we can have a whole nother discussion, or somebody can have a discussion with you on the long-term impacts of QE3 and all the rest of it for the U.S. But in the meantime, in the short run, the reaction on the dollar has been favorable for Canadian commodity producers.
Have you been hearing anything about some of the currency analysts you talk to as far as what potential is the downside of the Canadian dollar?
Well, it'll be interesting to see what the chatter is now that we have seen the break level, back below par. I mean, I think a lot of the analysts had been talking all along about, par is a very much a solid support level, and not many were possibly viewing it. So the fact that it's broken through those levels, I suspect we'll have a new round of discussions about where to from here. I don't think there was many people on this map.
Okay, well, the next, maybe less of a good story is obviously some of the Alberta plants have been, on a reduced kill schedule, 4.5 days roughly. Obviously, no Saturday kills. What's the struggle here? It's obviously moving the boxed beef.
Well, movement hasn't been good at all. Supplies. Packers have been faced with smaller supplies a lot of this year. As you well know, our beef production levels will probably be down about 15% here in 2011 versus last year. On top of that, our beef exports are down about 25%. So all of that is the supply story. Now, here in the short run, of course, we've seen that situation back up cattle in the feedlots as we speak. But I do think latest intelligence would say that the Packers have, or some of them at least, have most certainly got those kills back on track. And I think you'll see some better numbers here for last week, this week, and hopefully next week. But it's a concern, Sean, in regards to the fact that product hasn't moved as well domestically or in an export market. And I think you have to, be looking at price when you make that statement. Beef prices at the retail counter have been high, record high in the U.S., and that most certainly has been a factor as consumers continue to look at things like high unemployment rates and still very questionable issues on the economic front. So it's a concern. Demand has been a struggle through the last recession, and now more talk of economic uncertainty into 2012 has got everybody wondering what happens to demand from here.
Yeah, I think a lot of producers we talk about box beef, but we don't maybe necessarily know how that market works. Is the process of the packer selling the box beef to the grocery chain or the distribution channel, is that similar to the other relationships in the value chain? Like, is it basically, here's what we have to offer, we have this many tons of steaks and people bid on it, or how does that work?
Well, it's a pricing mechanism, and there'll be various different pricing mechanisms, just like we have in cattle. Whether there's some forward out sales where you're making some long-term sales 6 months out in front, whether you're looking at specific programs, whether it's a branded beef program, and you're making some very specific purchases ahead, whether it's some of the large box stores, retail outlets, whether it's the Costco's or the Walmarts of the world. Of course, those tend to be longer term arrangements in regards to sales structure, and then you've got the short-term deals as well. So it's a little bit of everything, and again, it's all as retailers and food service outfits look at how consumers are buying or not buying products, orders go out accordingly.
And in reality, we need probably the three main areas are restaurants, Costco, and Walmart. Are those the three main clients we need to pick up?
Well, Well, first of all, I would break it into two. You've got your food service, your restaurants, whether it's quick serve all the way to high end, and then you've got your retail, and that can be anywhere from kind of your traditional retail outlets like a Sobeys and a Safeway and whatnot, to more of the box store type retail outlets like Walmart, Costco, or the discount kind of operations like superstores. So retail, food service, those are the two big names at the top, and then you've got the various different arrangements down below that, depending on who you're talking about.
Yeah. U.S. Cattle on Feed report coming up. What are some of the expectations or the impacts of what that report's going to tell us?
Well, we all like to think we know, and right now what we think we know is that, again, placements for large coming out of those drought areas in the southern third of the U.S., especially Texas, and so that the August placement number we think is going to be large. The pre-report guess officially, the average of the trade guesstimates is 8% more than last year. Remember, that falls on a larger placement back in July and a larger placement back in June. So we've had several months of big placements coming out of these drought areas. I'll call them forced placements, and that means our September 1 inventory in U.S. cattle feedlots is going to be up about 8%. So these are the pre-report guesses. We'll see what the report comes off like Friday afternoon. But again, the bottom line is the storyline and what the trade's prepared for is lots of cattle as we head into this winter time frame in the U.S.
And what if that holds to be true? What's the impact on the markets?
Well, I think the markets like to try to, or at least the futures markets, and those of us that think we might know something about cattle markets like to try to predict those things in advance, and I think that's kind of built into the marketplace as we speak. You've got the December and February contracts, not a whole bunch higher than where we're seeing current cash markets. And then as you get past that into second quarter of next year and beyond, of course, markets are showing that they think the supplies are smaller out there than they are in the winter. So right now the markets are already trying to predict and tell us that prices probably haven't got a whole bunch of upside as we go into the end of this year, early next year, before we move into the next spring price rally.
Okay, and I guess overall, how do you feel about this market right now?
Well, I think a lot's going to depend on where you're sitting in the chain. I think if you're a cow-calf producer looking at coming into the fall calf run, or if you've just sold your grass cattle, it's been a pretty good year, and people are smiling over the prices that we're seeing on feeder cattle. I think if you're further along the chain into the feedlot sector or the packing processing sector, you're looking at some pretty high prices for your raw material and input costs, and you're wondering, are we going to be able to get it out at the other end? So there's lots of different opinions, and I think thought process in regards to, is this good news, bad news, or going forward. But the bottom line, I think, Sean, is we know in this industry we've got to see profits, especially at the grassroots level. It's been a long, dry period, and for this market to see some increased supplies, we've got to see profitability at the cow-calf sector. So I think that's good news. I think what's happening at that level is long overdue.
Yeah, well, we definitely had that discussion before, and I very much agree with you. And the trend, or I guess how this fall is shaping up is that the winner from a profitability standpoint, appears to be the cow-calf sector, and what happens with the feeder and the packer is really up in the air right now.
Well, and it's a margin business, so again, at the end of line, the consumer will tell the final story on what he or she's willing to pay for beef in whatever segment we're talking about, food service or retail. So those things take time to get felt all the way through the system, but we will most certainly get those messages coming at us going forward.
Ken, we will talk to you again in 2 weeks. We'll have a good 2 weeks.
Okay, thanks, Sean.